Welcome, Tradespooners, for our pick on February 11th, 2014. We're looking to go short Weight Watchers International, ticker symbol WTW. Our proprietary pick ratings coming in, the risk reward is at a 3, so it's on the low end of the curve, and the value momentum is at a 2, again on that low end of the curve of the 1 to 10 scale. This is important to take a look at because when it gets on the lower end of the scale, that's an indication that we should be using some prudent size management. And as always, dig deeper in our proprietary analysis report that we provide here at Tradespoon. Let's take a look at the price action. The stock closed the night before on the 10th at $27.99. We have the 52-week high at $55.02 and the 52-week low at $26.35. So we're coming off of those lows. You see the implied volatility change. It's about 27%, almost 28% off of the 52-week lows. So volatility is on the move, but still not in that range that we would say that there's a huge explosive potential expectation of movement. But still, it is on the move, and we want to keep an eye on that. The return on capital is 100% for the option strategies. The probability of success right now is being measured at 68%, and our estimated move analysis going into February expiration is $3.20. So taking a look at the stock trade, we're going to sell short stock WTW at $27.99 or better. Now our target gain is going to be $5.40 below that. So we'll put a buy at roughly around $22 and some change, so $22.50. You'll have a buy to close or a buy good until cancel at that level of $22.50. And we're going to put our buy stop above our entry price, which would get us out roughly around right around $33 is where we would want to put our buy stop good until cancel. That's just to protect us if the market does start to, or specifically WTW, starts to spike to the upside. And again, use very prudent risk and capital management, meaning size this thing appropriately with, as you can see, the low risk reward and lower value and momentum ratings. We're suggesting 3 to 5% as a range, but again, with those ratings being so low, we might want to use some very prudent size management. Now on the options trade, we're looking to buy the February $27.50 put, so that is a bearish strategy. That's why you see this is red. And the price that we're willing to pay for those $50 puts that expire in February is $2.25 or $225 per contract. Again, use prudent risk management. Now here, if we're going to put a sell limit out there for a target gain of $4.50. That's $2.25 higher than our entry price. Now we're willing to risk $2.25 per contract. In other words, what we're willing to pay for this. And so again, size appropriately. For those of you that are looking for a spread strategy, we're looking at selling a call credit spread. And so we're going to look to sell the $27.50 calls that expire in February, and we're going to receive $2.35. We're going to get a credit. But we're going to offset that credit and also limit our risk to the upside, just in case WTW starts to trend to the upside and starts going above $27.50. We're going to cap those losses off at $30 by buying the February $30 call, and we're going to pay $1.35, which net means our credit on this $2.50 call spread, $27.50 minus 30, is $1, which also means that our risk is $1.50. That's correct. We're willing to risk, though, in this trade $1. So if this credit spread is trading for $2 or greater, we're going to get out of it. How I came up with that is we took $1, we added it to our credit that we received. So when or if this spread is trading at $2 or greater, we're going to get out of it. And so we would put a buy stop limit, which means that it will trigger a stop if it is bid at or trading at $2. And we'll put a limit price to pay $2 to get out of that strategy, and we'll monitor this accordingly. And we'll have that out there good till cancel. Now, you can place a virtual trade just so that you can get familiar with this strategy if you've never traded it before. As I've mentioned before, we have our proprietary Tradespoon virtual trade, and again, with any one of these trades, you can test that out, especially for you new Tradespooners. Now you see the price action has been to the downside. It has been trying to trend up recently, coming over its 30-day moving average. But again, we're going to keep an eye on that, and specifically we want to keep an eye on this earnings on 2/13. This is going to be a date where implied volatility could even come up a little bit more coming into the event. So keep an eye on that. If there's any heightened expectation of potential movement, you're going to see that reflected in that volatility percentage change. And as always, you take a look at the new commentary. If you ever have any questions or considerations, all you have to do is email us at info@tradespoon.com. Well, folks, that is the pick for February 11, 2014. We're looking to go short WTW, Weight Watchers International. Thanks a lot for watching this, and have a great trading day.